So let's continue with speaking about digital asset, especially about capital markets and how DLT and regulation is actually kind of fostering a kind of integrated European market. So let's start with the ECB. So the ECB trials, you probably know, they were really well received in the market last year. And I had the feeling, because I worked for some clients, that they want to continue somehow. And the ECB, end of February, announced that they want to expand the initiative and they want to follow two tracks here. So one track is to build a kind of platform where you can settle securities with central bank money, and they want to do it in a way that you have a kind of interoperability link with the target system. So it's, from a technical point, it sounds pretty much like I think the Bundesbank trigger solution, where you just like have a kind of like a trigger into some system, some existing system, and you can say settle the cash leg, and then you have the other crypto leg on the DLT. And the second track they want to look into is a more kind of highly integrated long-term solution, where you probably, I mean, this is what I'm guessing, you're following this kind of Banque de France approach, where you have like a tokenized central bank money, say on a chain, and you can maybe bridge it into a different DLT networks. So this is just a guess. So there's nothing like a timeline announced yet, but it's probably a new kind of element we can use to build like securities and security settlements. So the ECB actually is like kind of promoting a kind of integral capital market, and they want to secure the role of the euro. I mean, as you would probably expect, so that we have like a kind of risk-free settlement currency. And they see the risk, I think, definitely in stable coins, because I mean there's some kind of risk associated to that. And it could happen that like securities will be settled in stable coin or like commercial bank money, and they also want to put something into the game. They also see like the capital market is really fragmented, as we know. And it's really kind of like, you know, if you want to build like a big capital market, it's really slow and difficult. And they see also like opportunities in DLT technology. So I can't say if they see it like in public blockchains or private blockchains, but at least in the technology they see something. And there's the possibility, I mean, to build something from scratch, and you can do that like building it from the DLT pilot regime, which is kind of like a regulatory sandbox. I come later to that. So there's a new game here. And if you look into capital markets, like say, let's compare the US and Europe. So I have this small picture you can see here, so the European side is, say, it's really kind of fragmented. I mean, it's just like organically grown, I guess, from, say, 27 jurisdictions. On the other side, you have the US, which looks a little bit sleeker. And I mean, I'm a physicist, and I would say that always like less complex systems are easier to handle. And so there's still some work. And I think it's also like pretty nicely visualized if you look into CSDs. So you have a lot of CSD here which are interlinked. So we say when I'm, say, in Germany, I want to buy like an Italian bond, probably I go to Clearstream, and they have a connection to the Italian CSD, and I don't need to be a participant of that. So you have this kind of, say, complex network, and if you, say, add something, you know, you're adding kind of complexity to that. So we have a kind of really kind of fragmented market here, which can be changed, which can exist. So if you look into, say, DLT technology, you can do something about it. And the question is how. So let's go into that here. So what you can see here in the first line is you have kind of different services, like you have banks, exchanges, you have maybe asset managers, you can have industry application and so on. And they accessing a kind of say, distributed system. It can be more, it can be a single one, we don't know yet. I mean, the vision would be something like there is a kind of a single layer, but it could be also like something like a lot of kind of connected systems. So something we can't say yet. And what you do essentially is you're going into a more horizontal structure where you're kind of changing, or where you're sharing business process, where you're sharing business logic. And in the last layer, you can have assets. I mean, you know, we have like cryptocurrencies. We have, I mean, we're getting now these stable coins. We have utility tokens, and we also like now we have securities like electronic securities, for instance. And there's also other assets. But I mean, the big advantage here is that you have this kind of horizontal layer which everybody can somehow access. So it's something which is built up. So there's this kind of vision that we will have such a structure. And we have also some regulations. Say, let's start with securities. In Germany, we have the EWPG, which is kind of groundbreaking because first, it allows that you put a security on chain, so putting the logic on it, or part of the logic. So you can you have a kind of paradigm shift where you're going from, say, security, you know, in a kind of traditional sense, into something which is more like an application-like thing which you can access. And what the EWPG actually allows is like that you can have like peer-to-peer transactions. So like we can have a peer-to-peer transfer, say what I've shown here, like say Alice, she has her own wallet and Bob, another investor, has also her own wallet. And say both are going through a KYC process with a registry, so they are participant in this network. And they can just like send, say, security from A to B, but there's a registry in between, so they're controlling, say, the transfer restrictions. So it's a really simplified picture here, but this is essentially possible. And so the other kind of element, or the other kind of regulatory element we have is the pilot regime. So in the pilot regime, it's more like a kind of sandbox where you have certain restrictions on the assets. Say there's like a 6 billion cap on the market value per DLT operator you have. And you have three, say, different kind of infrastructures you can build. You can build like an MTF, you can build a settlement system, or you can combine a trading and settlement system in one platform. So this kind of, I think it's kind of groundbreaking in my view. And so you can have like direct access from retail customers to, say, an MTF. You can use also you can use electronic money tokens for settlement, or like you can use stable coins, and probably say in the future you can also like when the ECB is, say, contributing with a wholesale CBDC, you can also look at wholesale CBDC for settlement. So this is possible. And what you're integrating here is like you can have like trading and post-trading activities, say, in one platform. So I mean, there's like companies like 21X, so they have this really nice thing where you can say, okay, you have a kind of you have like a trading venue or on a DLT, and you can doing the matching, and you also like doing the settlement, say in it's simply like almost like in one or two transactions. And I think that this pilot regime will likely be continued. I think there will be a review next year, and then will run, I think, till 2029. So why this kind of, say, single market is really, really interesting and really kind of valuable for Europe. So one thing, I think it's in the public interest, so it gives much more transparency, and I think it also makes the capital market, say, much stronger, because also we have another countries which trying to build similar things. So probably also like give better funding for startups and scale-ups. We have less intermediation. So from the issuer side, I think you will probably access a larger kind of investor base here. You have streamlined processes because things are getting much more digital. And if you have this kind of sleek products, it's also probably the access is much easier because you have maybe also less entrance barrier costs. For intermediaries, I think then you have like kind of variable cost structure. I think it's similar like using cloud infrastructure. The more efficiencies, you have less settlement risk here, and you also can like build new services around that. And for investors, I think I mean you get direct access. You have probably better user experience. I mean, I can imagine if you have like say like stocks, and I can participate in voting if I have enough stocks, and I can make it on one application. So I think there will be some kind of innovation. So to summarize here is like we will have like this kind of say. Yeah, capital market infrastructure. It can be like one DLT. It can be many more, or say some DLTs which are kind of interconnected, and there's some kind of new roles in the system. So I mean, we spoke about like a crypto custody just in a discussion. So You can use cryptocurrency for securities. You can also like use operational wallets where you're trying to secure your, say, all your processes around securities, like issuance and so on. So you can use this kind of sources to add this kind of security layer to it. You definitely need some kind of euro form on the ledger. So it can be like a stable coin. It can be commercial bank money. It can be wholesale CBDC. And we have this kind of, say, it's in new systems which can be, say, built in a pilot regime. Like, I mean, I think the craziest thing is like a trading and settlement system in one platform. And we have the security registrar, definitely also like tokenizer and so on. So let's look ahead. So let's see from a regulatory standpoint. So we have the pilot regime, and we have so this is European-wide. We have national laws like for security and security issuance, like the PWG. And what we need is also on this side a more kind of harmonized law regulation on that. We still have the problem with capital requirements, specifically, say, on public blockchains. It's really high, and there's something to think about it. So I think we have here a kind of window where we can, like, build kind of harmonized regulation to actually build a capital market, and I think we have to do it really fast. From the market infrastructure perspective, I mean, what we just have seen here in the discussion, there was like, we have stable coins, we have a trading and security settlement system, we have various registrars, we have custodial service. So, I mean, all the pieces coming slowly together. And I think the next step is like that the ECB will probably announce some kind of solution for the wholesale CBDC, which will probably also enter, say, the design space. And so I think the market infrastructure is still in a kind of really early stage, and we have most of the components together, and I think it's really important now to build on that. And yes, that's it from my side.